There's so much to talk about these days in the markets, so many across so many fields, by the way. And that's why I'm so pleased to have with me Martin Straith of the Trend Letter. You probably know him there, but there's several other letters that they do. And maybe you saw him at the World Outlook Conference also. Martin, let me just start with the World Outlook Conference because, as you may know, I always say it's a business of results. Very different than politics, by the way. We care about results here. And I just want to say, I think you had like 9 recommendations when you presented at the World Outlook Conference. And it seems like, correct me if I'm wrong, but every one of them went up.
Yeah, Mike, good to be here. Yeah, our batting average has been really good at your conferences. I think we hit similar numbers the year before that. So, yeah, all 9 of them did well. I mean, mostly they were mostly small caps that we got into. A lot of energy, copper, certainly a lot of gold that was in there. So, yeah, of those 8 or 9, I think the best one was Bravo Mining, which was 85%. And of the whole 9 of them, they averaged over 44%. So yeah, and that's within 5 months, a little over 5 months.
You know, it's interesting as we've been chronicling, I'm proud we have, and it was at the World Outlook, chronicling that's, it may be a time after junior golds hadn't performed, for example, certainly not commensurate with what the size of the move had been on, with the gold bullion itself. But man, I'm certainly seeing a lot of activity in that sector now, a lot of interest building in that sector.
Yeah, certainly. Gold's had a terrific run here. But it's interesting, when you get the retail investor, when the masses finally start to come on board, that's the time when you start to have to kind of look around and say, well, hold on, maybe things are getting a bit frothy here.
Yeah.
Gold's actually been quite disappointing recently. If you think about it, if you look back in April, that's when gold hit $3,500, so that was an all-time high. And then, but since then, gold's done nothing. It's just meandered sideways. It's been trading in an upper wedge pattern. But the thing that's interesting to me is that since April, so since that $3,500 high, we've seen the US dollar fall about 8%, and yet gold could not rally during that time. So that kind of got us to sit up and take notice here a bit. So the other thing that's very interesting is that back in April, when we hit that $3,500 high, gold barons put gold on the cover of their magazine.
Yes.
And that is a kiss of death for any sector. And sure enough, since then, gold has done nothing, absolutely nothing. Yeah. So it's trading, like I say, it's been trading a well-formed wedge pattern. But just today, here we are on Friday, I just see it's fallen out of the lower rung of that wedge pattern. So that's a bearish indicator. So you think about it, we've had 3 months of just no activity. And this is all happening when you've had pretty much every narrative imaginable that should have moved gold higher. We've seen the stock market crashed in April. We had those ICE protests in LA.
Yeah.
We had the war in Iran, the US bombing of Iran. And then again, the US dollar falling 8%, and yet gold could do nothing. So just on a technical perspective, the point of control for gold right now is 33.40. And for those who don't know, point of control is really the average, the highest price trading range over the last 30-day period. So over the last 30 days, 33.40 has kind of been the peak of the trading. Well, I'm just looking here now, gold's 33.25. So now it's dropped $15 below that price. So that's a bearish indicator. So right now we're looking at 32.20 would be key support for gold. If we get down to 3,000 or between 3,000 and 3,200, I'd be a buyer there.
Yeah.
Now, don't get me wrong here. We're certainly long-term very bullish. I mean, you've got Trump pounding on Powell here, threatening to fire him. I don't know if you saw the video where they were touring the Fed building yesterday. Powell looked ill. I mean, he looked just beaten. So he said he's not going to resign, but I wouldn't be surprised if he is. So we've got Trump wanting to get interest rates down to 1%. I mean, they're currently 4.4. So that would be a massive drop. So that would be a huge boost for gold. he's passed that big, beautiful spending bill. Well, that's going to add up to $5 trillion to U.S. debt. And then you've got the U.S. dollar's been struggling. And then, of course, you've got every country that's been, implementing massive stimulus packages. That's just going to beat down all of those currencies, and that just destroys the purchasing power. So long-term, gold's going to do really well. And realistically, all the white metals as well, silver, palladium, platinum, I think they're all going to do real well.
Let me just skip around a little bit because there's many things I want to get to you. And, at the Trend Letter, you guys do a variety of, I think you do 6 different subjects, specifics. So obviously you cover this range of things, but just a quick take on oil.
Yeah, oil's another interesting one in that, we've been very bullish long-term oil, but certainly short-term, we kind of changed our tune a bit. We had the big spike when the U.S. bombed the Iranian nuclear sites. Went up to it went from about 55 up to 60s, and then it went up to 75. But it's been, we got pretty sluggish global economic growth. We got all the trade war fears and all of that. Just the other day, we saw the EU add yet another sanction on Russia. And, that sounds like that would, well, that's going to boost oil. But oil didn't move it at all.
Mm-hmm.
And if you looked at, I actually just checked with Perplexity, that's one of the AI tools. That's the 18th sanction the U.S. has put on Russia. And I mean, that tells you how ineffective the other 17 have been. Russia is having no trouble selling its oil.
Yeah.
India, China, North Korea, all these countries that are not friends of the West, they're buying it. And a really interesting thing I saw while I was doing this little look through on Perplexity. So I did a query on, what's the price of oil really, historically? Because it seems like, especially in the US, that the price of the gasoline doesn't seem to ever change. And so back in 20 years ago, in the US gasoline was about $2 a gallon. Today, It's about $2.16. So really not much difference. And even though the prices seem to go up and down, they kind of balance out over time. And so we've got oil prices around, right now, they're about $65. Well, that's quite expensive, actually, compared to history. In 1971, you had a barrel of oil cost $3.15 on average. If you adjust for inflation, the $65 oil today is equivalent to about $8.40 in 1971 dollars.
Mm-hmm.
So oil right now is trading about 2.5 times higher than it was back in 1971. So to me, that just shows that while, prices seem stable, the reprices, they continue to have grown a lot over the last 10 years or so. So bearish news right now for oil. You've got declining, demand in China. You got softer economic data in the U.S., Europe, and Canada. And you got the supply. I mean, supply is not excessive, but it's still on the high side.
Yeah.
And here we are. We're near the end of July. Based on seasonality, that is the very weak period for oil. So, we're trading around $65 here. The point of control for oil for the last 30 days is 65.60. So we're right at that main point. If it can push through 67, then 70 is possible. But unless we get some geopolitical problems, I think oil is going to drop below 60. I can see it down to the mid to the low 50s, actually. But as we get to the next quarter, I think we're going to see oil start to rise. So that's kind of my big picture. Big picture is oil's going to go up. Short term, I'd be waiting for a better buying opportunity.
Now, look, I'm going to throw a couple of things at you because, as I said, in the Trend Letter, you guys follow several different markets. And one of the ones I've always had lots of fun with is the trend disruptors, where you look at things, like AI is the obvious one now, but you've been writing on it for a while. Virtual augmented reality, 5G, cloud, Internet of Things. All of those things have been on the table. So there's lots to talk about. But you have a couple of new things, too, that I think is very, very timely. And you call it the new DeFi Digest. First of all, tell us what that is. And the good news is you can, you're a listener to Money Talks, and we'll put up where to do it and all that. You can get a free copy of that newsletter, because the next issue is coming. But tell me a little bit about the DeFi Digest.
Sure. Yeah, so we started this. This is actually part of our Trend Technical Trader service. Bruno and his team have been doing this. So we've been involved. I mean, we've been involved in Bitcoin back, 15 years ago, and very similar to when we first talked about Bitcoin. It's new terminology. It's a whole new way of things are happening, and so what we're doing with DeFi Digest is really helping people understand what's going on. And it's very speculative, but there's going to be some real opportunities. So DeFi is decentralized finance. And so what that is, it leverages the blockchain technology. And so what you're basically doing is you're delivering financial services without the intermediaries like banks. And so what you've got is, some context is basically we're talking about very similar to what Bitcoin was, 15 years ago. You're getting in on an opportunity to get into a whole new financial revolution that's starting to happen. It's an ecosystem. It's peer-to-peer financial services on blockchain technology. And the thing that's really key is it's without those intermediaries like banks. It's peer-to-peer. So it's open to anyone who's got an internet connection. There's no paperwork. There's no middleman. So, you've got the biggest banks in the world, JP Morgan, you got BlackRock. They're estimating that in the next 10 years, you're going to be seeing between 15 and $30 trillion transacted in real world assets. So we're talking about, making digital transactions on a huge range of assets. We're talking from corporate debt, government debt, real estate, fine art, commodities, you name it. I think it was back in 2020, right around COVID. Actually, on your when we did the conference virtual, I did a presentation on tokenization, and it's that same thing. And one of the examples I gave was using a warehouse, and where people could actually, right now, if you want to buy a warehouse, you have to have a lot of money, right?
Yeah,
if a warehouse worth $20 million, probably you and I maybe not, pony up to it. But with this whole tokenization, you can buy a piece of that warehouse. So maybe it breaks down into they break it into a whole bunch of pieces, and they're worth $1,000 each. Well, you could buy $5,000 worth of that warehouse, or an art painting, or a racehorse. They've even done racehorses, or a vacation property. So this is the kind of things people need to understand. Gambling, people are gambling, online gambling all the time, and you have no idea, unless it's one of the bigger ones that run by the government. The other ones, the offshore ones, you have no idea how safe that platform is.
Yeah.
But if you're gambling peer to peer, you're basically gambling, not with black boxes. You're gambling with other gamblers, and you're just basically gambling one-on-one, facing each other. The other big key is, early adapters are going to have the opportunity here to capitalize on this real shift, very similar to what happened on the internet and what happened with Bitcoin. But the big key, and one of the main reasons we started DeFi Digest, is there's going to be a learning curve. And just like when the early people that got into Bitcoin, they had to learn new technology, new terminology, new tools. DeFi, you're going to have the same kind of issues. So you're going to have to learn how to deal with digital wallets, private keys, and smart contracts. But again, I think that the more educated you get, and if you're a person that really likes to get in on things early, I think the DeFi Digest is really for people. And like I say, it's free right now. We will eventually start charging for it, but people can just go to info@thetrendletter.com and sign up for it.
Well, the other thing I'm thinking while you're talking here about bypassing the banks is you got a pretty good advertising this week. One of the big stories was the lawyer who was known for her involvement in the Freedom Convoy, and she was critical of Canadian institutions. Well, the Royal Bank terminated her banking relationship with them without any real specifics. And I'm just thinking that's exactly why people want to bypass the banks. I'm just a little add on to what you were just saying there. So yeah, fascinating thing there. But as I say, as you say, you early on learn about it with that. Uh, Let me just say, let's come back to going forward here. By the way, I got to thank you. Over the years, your support for Special Olympics and Heads Up guys, you've always given back. I mean, you donate $50 for every subscription to Special O and the Heads Up guys. So I'd be remiss if I didn't thank you, for doing that. Everything makes such a big difference. So let's summarize by looking going forward here. And that is, the kind of market you expect. So you've got people on the sidelines I think it's good news for them. They want to buy more gold. Great. You think there's going to be a dip there. You want to buy, get an opportunity in oil. There's going to be a dip there. So again, give me just a broad brush of where you think, as we look into the fall, into the year end, what's got your interest?
Well, I think that one of the things that's really, obviously the stock market has just been booming, right? It's
Right.
it's running on animal spirits here. It used to be everything was about the Fed, right? When's the Fed going to cut rates? Soon as they're going to cut, that's good news. I mean, we went through years of, you get the economic data come out, and it's like, good news is bad news, and bad news is good news. When we get bad economic data, the markets would jump up.
Yeah.
And the logic was, well, if the economy's slowing down, well, then the Fed's going to come in right into the rescue and cut rates, and that's going to be good for stocks. And we've been listening to that for like 3-4 years now. But now things are changing. I think that, it's now all about Trump. And, like him or hate him, whatever, he is driving the markets here. And his daily rants, he's threatening Powell.
Mm-hmm.
Like to say, we saw him on that tour, the Fed building. I mean, Powell looked ill. And so Trump wants to drop those rates down to 1%. The markets are just booming. We're setting new highs all the time. I think so. What's happening here to me is you got the fear of missing out. I'm just looking at the Goldman Sachs speculative trading indicator. That is right up there near the .com era kind of numbers. So we're getting all of these indicators that are telling us, man, you gotta start looking around here. Markets go up and then they stop. So we've got the S&P 500. So that's 500 stocks, but there's only 8 or 10 of them that are doing all the heavy lifting.
Yes.
Right? You got Nvidia. It just hit $4 trillion. What's it going to get? It's going to go to 4.5. Is it going to 5? Is it going to 6? The market's saying, yeah, it's cheering it on. Nvidia's market cap right now is equal to Germany's gross domestic product. I mean, you think about that. That's one stock is equal to the economy of Germany.
Mm-hmm.
You've got the Mag 7. Half of the entire stock market cap is the Mag 7. Is it going to go to 60%? Is it going to go to 80%? The key is, where's the top here? So to me, these markets are frothy. They're very overbought. We've got the fear and greed index is now at extreme greed. We got the put call ratio, which is now, it's right at levels that signal market tops. So I'm not saying it can't continue, but it's certainly, like I say, we're sitting up on our chair and taking notice here. Now, there's also a very interesting chart I sent out to our subscribers like a month or so ago. If you draw a logarithmic line from back in the Great Depression, so at the high of 1930, and you draw that to today, it touches at the .com, right at 2020 .com. It then also touched at February 25th high, and it's touching it again. Now, we're coming up to market the month end. Again, this is a monthly chart, but it's a 95-year trend line, and it has yet to be breached. Now, again, I'm not saying it can't be breached, and if things keep going the next week, it probably will be. But it also tells me that, we're a lot of indicators are telling me that, you better be prepared for some kind of a correction coming up soon. Now, I don't think it's going to be a long correction. I mean, every correction so far has been a V recovery in the last while. I mean, Trump is going to be pounding on the Fed to get those rates down. So I think we're going to get a correction of some sort, but I don't think it'll last very long. So our first initial support would be the 50-day moving average, which is around 6,100. The other areas, Mike, the whole crypto space, I think there's going to be, the whole stable coins, that new legislation that they brought in, that's going to really change things. Like I say, the US dollar has been declining. I think it'll continue to decline over time, but I think that longer term, we're going to see the US dollar really gain some strength. And the other big key to me is the whole crypto area. Like I say, that whole area, there's so much changing right now. I mean, we could talk for an hour on this stuff.
Mm-hmm. Well, maybe we should actually, carve out a couple of those, Martin, carve out and have a visit again soon and just talk and stay on one particular area as we've done before with the disruptors, and more with that. But in the meantime, people can go to thetrendletter.com, thetrendletter.com. We'll put up on Money Talks. So as I say, you've got, for right now, you can get a free subscription to the newer ones you've got that I think people will find fascinating with it. And Martin, I appreciate you finding time. I hope we can, as I say, visit in the near future.
My pleasure, Mike. Always a pleasure.